and President of the IAFA, and I would like to welcome you all at this joint workshop between the IASB as well as the AAFA and the PAAB of Zimbabwe. Yinka, if you can move to the preamble, please. So we are actually very proud to host this free virtual workshop and specifically to provide insights on the IASB exposure draft on IFRS for SME Accounting Standard and also how to respond to the IASB consultations. We are extremely excited as this is the first joint event with the IASB. And it's specifically aimed at developing the competence of our members in both responding appropriately to the IASB consultation and exposure drafts for the African continent and professional accounting practice in the region. We have a very exciting line of speakers, which will be shown on our next slide. And we are very happy. And you can see that it's quite a nice combination of both professional and academic speakers. We would like to welcome them all and thank them very much for making time available for this workshop in spite of busy schedules. So thank you for that. If we just have a quick look at some of the statistics for this workshop, you will see the next slide will actually show you that we have representatives from 34 countries representing, including 253 delegates, which is very impressive, and we are very happy about that. I think people will still be joining, so I think our numbers will increase as we move along. This slide actually shows the different countries represented, which is also quite impressive. If you have a look, we have various countries and one of our biggest number of delegates per country includes Zimbabwe. So a special word of welcome to them as well. If we look at the next slide, you will actually also see the distribution of registered participants. And you can see a nice distribution between both academics and practitioners, which I think is also extremely useful for a workshop of this nature. If we then look at the number of AA events attended in the past, we are also very excited to see that almost 65% of our registered delegates, this is their first IAFA event, and we hope that you will join us for many more. If we just look at the next slide, the source of information, you can see the various sources of information sort of informed this workshop. And also, if we then look at the next slide, it gives us the interest of people in future AA events, and we will make sure to include you on our mailing list going forward. Now, I think to get this workshop going, the next slide will show us the outline of the workshop. So I'm busy with the introduction. That will be followed by Anne that give you a brief introduction on the ED. And thereafter, the actual presentation on the ED will take place. We will have views from PAAFA, views from a practitioner from Zimbabwe, as well as 3 academic reflections. During part 2, there will be a discussion on how to respond to the IASB consultations, and we will close off with a Q&A session that will be moderated by Admire from the PAAB Zimbabwe. I think before I hand over to Anne, just a few housekeeping rules. I think as you have questions during the various presentations, please make use of the chat box. We will try and address that as we move along, but you will also have noted there is a Q&A session right at the end. where we can actually address that. We would also like to make a copy of the chat box, if it's not possible during the workshop to actually respond to some of your questions, for us to be able to do that going forward. If you actually have objection against us copying this, please include that into the chat box as well. We have a very full program, so I'm going to request of our different presenters to please stay within the allocated time frame. And we will also make sure that the copies of the slides are distributed to all the delegates registered, and also it will be uploaded on the various websites. And with that, I would like to invite you to enjoy the workshop with us. Thank you very much.
Next slide, please. Thanks, Marianne, for that very warm welcome. And it's a great pleasure for IASB people to be here today in this workshop. We thank the AAFA and we thank the PAAB of Zimbabwe for partnering with us in this workshop presentation, and also our academic colleagues. We appreciate that. And so this truly is a presentation across various stakeholder groups, and we're looking forward very much to your questions and to being able to answer questions with you today. And it's my great pleasure just to introduce the IFRS for SMEs, but firstly, we'd like to do a polling question. So next slide, please. And we'd just like to get some indication, if you could vote via the normal means for a polling question, so we can have some indication of your level of knowledge about the exposure draft to update the IFRS for SMEs Accounting Standard. You have a choice of none, some, or significant. Just wait a couple more minutes for more respondents to come in. Okay, we'll stop the polling now, and you can see on the screen that we have a mixed audience, with the majority of the people having some knowledge about the exposure draft, but we also have many people in the audience for whom they have no knowledge. And so this is a great opportunity for you to learn about the exposure draft. We also have a sizable proportion of people who have significant knowledge, and that's great because you're going to ask us the difficult questions, and we always look forward to that. So thank you, Yinka. Could you stop sharing the polling question, please?
Okay. If you just hold on for now. Okay, go ahead. Sorry.
This slide shows the agenda, what we would like to talk about today. I'd just like to make some introductory comments, and then I'll be handing over to Tinyinko to take us through the slides on the IFRS for SME exposure draft. Next slide, please. Next slide, please. By way of background, the IFRS for SMEs Accounting Standard is a standalone accounting standard, and it was specifically written for entities that do not have public accountability and that publish general purpose financial statements. So in the IASB world and in this accounting standard, we call this small and medium-sized entities. The IFRS for SMEs Accounting Standard is based on the principles of full IFRS accounting standards. And in terms of thinking about what content should be in the IFRS for SMEs Accounting Standard, we focus on the needs, the information needs of lenders and other users of the SMEs financial statements. Next slide, please. To give you a little bit of background on the timeline, the first edition of this standard was published in 2009 and it was immediately effective. The second edition was published in 2015 and effective in 2017. In that second edition, we did review some of the requirements of the 2009 standard and we made some changes. However, that review was a lot smaller than the review that we have been undertaking over the last several years. So in 2020, we published a request for information, and that raised many questions for our stakeholders. We were seeking feedback and we gathered a lot of information. That fed into our proposed amendments in the ED published in 2022. And that's what we'd like to talk to you today about. The timeline after this is that we consider all the feedback we've received and we make the amendments from the second review, and we expect to publish a document in 2022, and that would be effective in 2026. So with that, I'd like to hand over now to Tinyiko, who will take us through a discussion of the IFRS for SMEs exposure draft. Over to you, Tinyiko.
Thank you, Anne. I will be taking you through the rest of the presentation. As Marianne indicated, please, if you have any questions, you can use the chat function, but please allow me to go through the presentation, and then if we have some time from our session, we'll address the questions. However, I know there is a slot for question and answers, and we will be able to address your questions. With me, I have Michelle Sansom, and we also have Michelle Fisher, also from the IASB technical staff, who are part of the project team for the IFRS for SMEs Accounting Standard. They will also assist with addressing any of your questions and comments. Right, so I will take you through the rest of the slides. The objective of the project, the IASB maintains the standard by periodic reviews, as when it was developing the standard, it was told that these periodic reviews would reflect better the resources available to SMEs, as opposed to the full IFRS accounting standards that are updated more frequently. The periodic reviews are expected to be not more frequently than once every 3 years, and they consider updated or amended full IFRS accounting standards and other issues that have been brought to the IASB's attention. So the IASB started the second review of the IFRS for SMEs Accounting Standard in 2019, having completed the first review and making limited changes in 2015. As Anne mentioned, in 2020, the IASB published a request for information, which asked for feedback on a framework, whether, how, and when to amend the IFRS for SMEs Accounting Standard for full IFRS accounting standards. And based on the feedback from the request for information, the IASB then published the ED in September 2022. So when the IASB started with the second comprehensive review, it had two questions. And the first question was, what should be the scope of this review? And the second question was, what approach should it take for this review? Next slide, please. Thank you. So in the first comprehensive review, the IASB decided not to amend the IFRS for SMEs accounting standard for certain standards, because at the time they were just recently being issued. This includes IFRS 10 and IFRS 11. So in starting this review, it had to consider whether it should include those standards in this review. And the IASB concluded that it will include those standards in this review. Then this resulted in this review being having a broad scope, which includes 8 standards, the revised conceptual framework for financial reporting, and a number of amendments to the full IFRS accounting standards, as well as IFRIC interpretations. Next slide. Okay. So in setting the scope for this second comprehensive review, the IASB members had differing views about whether the IFRS for SMEs accounting standard should still continue being based on the the full IFRS accounting standards. And there was a need to manage these diverse views. And as such, the IASB developed what we call the alignment approach. And the alignment approach asks the IASB to consider three principles in deciding whether the IFRS for SMEs accounting standard should be changed. So I'll take you through the principles that have been used. So the first one is relevance to SMEs. And the IASB asks itself, would the change affect the decision of the users of the SMEs financial statements? And if and only if the IASB identifies that the amendments to the IFRS for SMEs accounting standard would make a difference, then it considers making a change. Then the second principle is simplification. Can appropriate simplifications be made? For example, the IASB is considering or it's proposing to introduce the expected credit loss model for financial assets that are not trade receivables or contract assets. However, the model is simplified based on the IFRS 9 simplified model. Then lastly, after applying the two principles, the IASB considers if the outcome would be faithful representation. Next slide. Having provided some background, the next section will provide an overview of the deliberations, well, the feedback from the deliberations that the IASB had from the feedback we received through the request for information. We'll start with the conceptual framework for financial reporting, which forms the basis of full IFRS accounting standards. As the IASB updates the standards, they become consistent with the conceptual framework. So to ensure consistency and in applying those alignment principles, the IASB is proposing to replace the section in the IFRS for SMEs accounting standard that deals with the concepts and pervasive principles, which is currently based on the 1989 framework, with a new section that is based on the 2018 revised framework. You'll see that in the exposure draft, this section is a new section. It hasn't been marked up as the old section has been replaced, and this is a new section. When we look at IFRS 3 business combinations, the IASB did not amend for IFRS 3 in the first comprehensive review. And in the exposure draft, it is now proposing to update the definition of a business. And this was in response to the post-implementation review of IFRS 3. So the IASB wanted SMEs to also benefit from those clarifications that are available to those applying the full IFRS accounting standards. So in terms of IFRS 3, the IASB is also proposing to introduce requirements for step acquisitions, including definitions of assets and liabilities from the new concepts and pervasive the new principles and concepts section, that's section 2, and is also proposing to simplify this by not changing the recognition criteria for intangible assets acquired in a business combination, not providing specific guidance on reacquired rights, and not introducing the option to measure non-controlling interest at fair value. The IASB is also proposing that contingent consideration be measured at fair value, unless doing so would require undue cost or effort, in which case an estimate of the most likely amount is permitted. Then moving along to IFRS 9, please do not mute us. I believe that in applying the alignment approach, the IASB achieved a balanced outcome. So when we look at IFRS 9, looking at IFRS 9 individually, the IASB is proposing to remove the option to apply the recognition and measurement principles in IAS 39. For classification, there is no change that is proposed. except if the financial instruments that are held do not fit the examples that are in the standard, in which case the IASB is proposing a principle for classification. And that principle is based on the contractual cash flow characteristics of the financial instrument. For subsequent measurement of financial assets, as I've noted earlier, the IASB is proposing to introduce the expected credit loss model for financial assets that are not trade receivables or contract assets. So if an SME only has trade receivables or contract assets, it will continue to use the incurred loss model. The IASB considered that users' information would be enhanced if using the expected credit loss model, but also considered that for SMEs that only have trade receivables, the costs would outweigh the benefits. In addition to that, the IASB is proposing to issue requirements for issued financial guarantee contracts. And this is based on the advice that we received from the Specialist Advisory Group, the SME Implementation Group. So the proposal is for financial guarantee contracts to no longer be measured at fair value at initial recognition, but to be measured at the premium received or receivable at initial recognition and subsequently measured at the higher of the expected credit loss provision or the initial amount recognized amortized on a straight line basis over the life of the guarantee. There are currently no changes proposed to hedge accounting as the current practice is working well. So overall, in applying the alignment principles, as I have said earlier, a balanced outcome was achieved for IFRS 9. So moving on to IFRS 10 and IFRS 11, in the request for information, the IASB asked for views on aligning the definition and the requirements of IFRS 10 and IFRS 11, and there was strong support in this regard. So that's what the IASB is doing for IFRS 10 and IFRS 11. The IASB is proposing to update the definitions, but more importantly for IFRS 11, the IASB is not proposing to change the 3 categories of joint arrangements. For IFRS 13, fair value measurement, it was considered in the first comprehensive review, but the IASB decided not to update at that time. IFRS 13 does not prescribe when to use fair value. This is prescribed by other IFRS accounting standards, but rather it provides guidance on how to measure fair value. So the IFRS for SMEs standard already requires or permits fair value under some of the sections. So the IASB is proposing to introduce the updated definition of fair value and include new guidance that is more comprehensive than what is currently in the standard. Lastly, but certainly not least, for IFRS 15, revenue from contracts with customers, the IASB is proposing a new section, that is section 23, which is based on IFRS 15. This proposal is based on the feedback from the request for information. The new section introduces the 5-step model, which is based on IFRS 15, and provides guidance on how to apply each of these steps. And the IASB is also proposing some simplifications to IFRS 15, which include for contract modification, separating warranties, and variable consideration. We can go to the next slide. There are some topics that the IASB is not proposing amendments after applying the alignment approach. And these are IFRS 14, the regulatory deferral accounts. The IASB decided to not propose amendments for IFRS 14 in this review. And this is because it has an ongoing project on rate regulated activities and will await the outcome of that project. The second one is the IFRS 16 leases standard. In the request for information, the IASB asked for views on alignment with IFRS 16. And based on that feedback, the IASB decided to defer consideration of IFRS 16 until the next review. And this deferral reflected, firstly, the users of the SME financial statements who are interested or who are more focused on cash flows. And secondly, the implementation costs of the standard. So in the next review, the IASB will have the benefit of the post-implementation review of IFRS 16. Next slide. So I will take you through the next steps, and I think Anne has highlighted some of them. Next slide. So we are currently in the consultation period, which lasts for 180 days, ending on the 7th of March, 2023. And then this technical staff is planning to bring feedback to the board and to discuss the feedback in Q2 of 2023. So we expect that the amended IFRS for SMEs Accounting Standard to be published in 2024. Next slide. So with this presentation, it was a brief overview of the IFRS for SMEs Accounting Standard. You can get involved in this consultation period, and I know that Anna will take you through how you can get involved, but we encourage you to go on the website, access the consultation documents, including the basis for conclusions, and we also have a snapshot document which summarizes the proposals in the exposure draft, as well as the expected implications of those proposals for SMEs and the users of SMEs financial statements. I think that's it from our side, and we'll take questions, I think, at a later stage. Thank you.
Thank you very much, Michelle, and for this session that really was very useful. I think as part of our workshop outline, our next speaker is Mr. Usai Ageamfi, representing PAAFA. So Usai, if you are available, then we can move on to your discussion. Can you just indicate if you are available? And Yinka, maybe you can just check to see if Usai has been admitted.
There's nobody in the waiting room at the moment, so I think everybody would be in.
Okay, I think if Usai is not present at the moment, I think can we then move on to the next speaker, that's from our practitioner from Zimbabwe.
Good afternoon.
Good afternoon.
Okay, yeah, my name is Elio Chatima. I'm going to try and summarize our perspective, or the perspective from a practitioner's point of view. Can you please go to the next slide? And I think in the interest of time, we're going to, some slides will obviously skip, but participants can look at them at their own time. And I think one of the challenges that we've also faced is to do with the standard does not, IFRS for SMEs does not specify exactly how do you determine which one is an SME. There are no clear demarcations to say what exactly are the factors. So there are quite a number of variables that can be used, and this makes it very, very subjective. So in some cases, you find that you can use number of employees, you can use turnover, net assets to determine whether an institution is an SME or not. But again, globally, I think this is one problem we have, where this is not obviously clearly.
So my girlfriend wrote it at.
Sorry, Elliot, are you still with us?
Yes.
All right.
Yeah, I don't know what was. There was some interruption going on there.
Yes.
Yeah, some disturbance. So, like I was saying, that this is one key challenge we have as to who exactly falls into this, but there are some exclusions. I've given an example of insurance businesses. Well, so obviously for certain type of businesses that the standard is taking a prescriptive approach, it's actually quite clear for you to know who obviously is excluded from this. Next slide, please. We could go to the next slide, please. Okay, that's fine. Okay, I think that's okay. Slide number 2. All right, fine. So this obviously is to talk about the role that is played by small to medium businesses in terms of growing the economy. So it's a sector that cannot be ignored, and it's quite important that the preparation of financial statements obviously speaks to the size and scale of such institutions. But of course, I'm going to talk about some of the challenges that obviously have been faced, especially from the lender's perspective, and also the idea that not many PAOs have got an emphasis in terms of training and developing talent that will filter through. So we've seen challenges where some SMEs will obviously tend to then prefer to adopt IFRS because banks are not understanding IFRS for SMEs and other things. So these are some of the issues that we have actually faced, where you have an SME preparing financial statements with full disclosures as per IFRS. Next slide, please. Okay, so adoption of IFRS is a difficult task, and of course there are quite many challenges that are there. Number one is the technical competencies for practitioners. So this is one key issue that we have seen or observed in the market. When you look at many courses or many professional qualifications, there isn't an emphasis on developing accountants that are able to prepare financial statements according to IFRS for SMEs. And we are quite, though here in Zimbabwe, we are quite fortunate that IFRS for SMEs is also one of the frameworks that we have. But however, beyond that, we haven't seen a deliberate effort by PAOs to then say, within our curriculum, within our courses, this is how you're supposed to do it. So this is one area that we feel technical competencies are lacking. And also, we haven't seen quite a lot of, what can I say, CPD forums. I don't think there's enough coverage or there's much discussion in terms of development of competencies in this area. Then again, number two, PAOs seem to focus on IFRS and not much investment in IFRS for SMEs. That's what I was talking about. And IFRS for SMEs are not part of the main professional qualification, hence not many opt to study it after qualifying. So due to the complication, to the difficulty of many professional qualifications, it is unlikely that a professional after qualifying, unless if they are required to, if they are working for an organization that is adopted IFRS for SMEs specifically, but they are unlikely to actually deliberately study just for knowledge purposes. So this is one gap that we have seen, that competencies are very, very difficult to drive. And even when you come up with CPDs, obviously, it's also been a challenge because it's a specific market, and that is also very difficult to demarcate and isolate so that you can meet the needs of such category. Then obviously, companies have no appetite for IFRS for SMEs. This is what we have seen, that even where a company is not required to report using the full IFRS, the emphasis has always been to say, let's go for full IFRS. But obviously, this has also created some burdens, some requirements in terms of disclosures and the like. But again, like I'm saying, like what I was saying, everything also filters from the inability to have the pool of talent that is able to articulate why IFRS for SMEs and how are these are supposed to be done. And also, it's sort of like market education to say you've got your listed entities with the public reporting responsibility that are required, obviously, to prepare financial statements according to full IFRS. But of course, there has not been much education as to why this is the case. But of course, there are quite many benefits that IFRS for SMEs actually brings, especially issues to do with reducing the cost of preparation of financial statements, the time it takes, and also the issues of burdensome disclosures that you find under detailed. Even, for example, when you look at your IFRS 16, IFRS 9, there are quite a wholesale changes that have taken place from prior standards. And if you bring that to a small company, obviously that is quite burdensome disclosures. I'm just trying to take my time here. Then the cost as well. It's one aspect. It may also be prohibitive to try and do this. And point number 5, banks and financial institutions require IFRS standard financial statements. What we have seen is that when a client comes to us and say we want financial statements, when they take these to the banks aren't actually familiar with IFRS for SMEs. So the way they do, I'll give you an example. If you expense, for example, if you expense finance cost, right? Just suppose you are constructing a qualifying asset, whatever it is, and if it's for SMEs, you can actually have the option to expense that, but banks actually don't think so. So you will find that the credit analyst who is evaluating your proposal is obviously evaluating from an IFRS point perspective, and obviously that is one of the challenges that we have. So yeah, I think it's one of the issues that maybe we may. I don't know how this can be taken into consideration, but yeah, we can go to the next slide. Next slide, please. Okay, fine. So these are some of the issues I was talking about in terms of accounting treatment and talent management. I want to go so much on issues to do with talent management because of time. So talent management is one of the key issues that we have to bear in mind. That because there are some borderline SMEs, which obviously SMEs that obviously can scale up to become big corporates. And the challenge we have seen is that if you want to insist on IFRS for SMEs to be adopted, the challenge is how are you going to manage talent in such kind of a scenario? And when you scale up the company, what sort of process are you going to take? So we have found it very easy. Companies have found it very easy to adopt full IFRS rather than adopting IFRS for SMEs. And part of it, obviously, like I was saying, is lack of that understanding as to say, why is it important for them to do that? And what is the changeover point in time in terms of the reporting requirements and how they are required to report. So if there are any statutory changes, if there are any changes in terms of them being required to prepare and present financial statements and publish them, etc. At that point, probably that's where obviously you need to be able to adopt full IFRS. But I think we've seen a situation where, because there isn't much understanding of the benefits of IFRS for SMEs, so there isn't much actually adoption of IFRS for SMEs. Next slide, please. I think this is just talking to what I've just been saying. Lack of training facilities and academic courses on IFRS is also a challenge. Key challenges, I think let's just skip that one again. The issues of fair value has been talked about. Can we go to the next slide? Next slide again. Yeah, I think I've talked to these issues. Next slide again. Yeah, I think issues to do again. This is I think bordering on IFRS for SMEs implementation. Okay. Okay, so this is obviously an issue to do with the high cost. So I think, yeah, I've spoken to this. I'm just trying to stay within the time. Can we just go to the next slide? Yeah, so okay, let's go back to, yeah. I'm gonna finish off with this standard. So with this slide. So what we have seen is that what we have done is to go through the exposure draft, and I don't want to labor much on things that Tiniko was talking about, but I think when you see what you see from a standards perspective, the standard is obviously the proposals are attempting to resolve some of the issues that were raised in the prior consultation, in the prior requests for information. For example, the alignment with 10, the issues to do with the conceptual framework in terms of intangible assets, and issues to do with retaining the current loss model, the IFRS 9. Though this, even when you look at the simplified model under full IFRS, others actually still, some professionals actually struggle with this. So we are not so sure whether if we put this requirement under IFRS for SMEs, whether that is actually doable, because this is one area. Even when you look at the responses that came through, one of the issues was to say, is this not fairly complex? But of course, yeah, these are the comments that are coming through, and it is our belief also that the requirements are also on the burdensome side of things. But we will see. Then obviously joint control, I think this has been discussed. Then IASB proposing to align section 19 business combination and goodwill with the acquisition method of accounting. In IFRS 3 business combination, this has been talked about. Remaining revenue, renaming revenue to align with IFRS 15. This is a welcome development. I think the 5-step model is actually quite good. No change to, let's see here. So there's no change to leases. This is also one area I'm not so sure what inspired that. But of course, there was a mention of cost and benefit consideration. But again, this also goes back to what I was talking about, to say who is an SME and how do we deal with that. So I think in terms of time, I'll end here. If there are any issues, we can then discuss after that. Over to you, Anne.
Thank you very much, Elliot, for sharing the practitioner's point of view and some of the challenges in that regard. And I'm sure that will form a good basis for further discussion during the Q&A later on. So thank you very much for that. So that's from the practitioner's point of view. I think we can now move on to the academics viewpoint. We have 3 academics. We try to be representative of Africa. So we've got Professor Salma Damak from Northern Africa. We've got Professor Wayne van Zyl from Southern Africa, and Dr. George Taki from Central Africa. So I'm going to hand over to Professor Salma. Thank you very much for joining us today. And please go ahead.
Hello, thank you. I'm Salma Damak Ayedi. I'm professor at University of Carthage. I'm also the president of Tunisian Accounting Association. I'm very happy to participate to this workshop to present an academic view about the adoption of IFRS for SMEs, especially in African countries. Next slide, please. In Tunisia, we have a national accounting system since '96, and we prepared the IFRS transition for the next year for listed companies and for banks. Next, please. Next. In African context, SMEs make up more than 90% of all enterprises. They contribute about 90% of total employment across the continent. But African SMEs face two significant financial challenges: accessibility and affordability. The adoption, we think that the adoption of IFRS for SMEs can be the solution to deal with this problem. Next. Regarding the literature review about the IFRS adoption in general, we conclude that a number of factors could affect countries' adoption. So some authors have focused on the environmental determinants of full IFRS adoption, like Chima and Young, Ramana and Slayton, Zghal and Mhazbi. Other studies have investigated the impact of institutional factors on the level of IFRS adoption, like Bodgan et al., Judge et al. The next, please. Very few studies has focused on the small and medium-sized enterprises, especially the adoption of IFRS for SMEs. We have noted the study of Ariel and Haller in Germany, Atik in Turkey. Kaya and Koch has analyzed 128 countries' experience of adoption of IFRS for SMEs, and they concluded that the existence of local accounting standards and the quality of governance has a negative impact on the decision to adopt IFRS for SMEs. But they concluded that that countries with common law system are more or less to adopt the IFRS for SMEs. Bonito and Pace confirmed the result about common law legal system and concluded that the national set of financial accounting standards for SMEs has a negative impact about the adoption of these standards. There is no relationship with education level, foreign aid, quality of national financial accounting standards. Next, please. Salemi and Gafsi concluded also that the mimetic and coercive isomorphism, the number of SMEs encourage the adoption of IFRS for SMEs, and there is a negative impact of tax system and governance quality. Recently, Zaid and Singamagan concluded that the business freedom, market openness, economic growth, legal origin encourage the adoption of IFRS for SMEs. Next slide, please. In our study conducted with Nisreen Sesi, it's a recent study. It's the first study focused on African countries in 42 countries, including 17 jurisdictions that adopted these standards for the period 2009-2015. So to explain countries' decision to adopt IFRS for SMEs in African context and to provide a broader understanding of this direction, we explored neo-institutional theory and the economic theory of networks, and we suggest 6 hypotheses. We proposed that the trading networks and the quality of corporate governance have a positive effect on the adoption of IFRS for SMEs in African country, and that the tax system has a negative impact. Next. we proposed also that the coercive isomorphism and mimetic isomorphism have a positive effect and encourage the adoption of IFRS for SMEs, but the normative isomorphism has a negative effect. So next, please. We conducted our study using a logistic model regression. Next, please. For the 42 countries, and the results of this study shows, next, please. Shows that the hypothesis for trading network and quality of governance are confirmed. So the harmonization of accounting practices makes trade between African countries easier. We concluded also that variables like the quality of regulation, the degree of respect of law, the degree of control of corruption, the political stability are important for the adoption and encourage the adoption of IFRS for SMEs in the African context. Our result revealed also a negative effect of mimetism, isomorphism, and a positive effect of normative isomorphism. Finally, we concluded that the tax system do have not significant effect on IFRS for SMEs adoption in African context. So we conclude that this study puts better understanding and of the implementation of IFRS for SMEs in African countries and can be used to predict African countries' decision and be useful for decision makers, external auditors, and SMEs managers. Thank you for your attention.
Thank you very much, Professor Salma. It's indeed been very informative information on the literature available, as well as the results of your own study, which I'm sure would be very valuable in future deliberations. So thank you for that. We will now move to our next academic, Professor Wayne van Zyl, for his presentation.
Thank you very much, Marianne, and good afternoon, everyone. Thank you for taking the time to listen to us today. Next slide, please. As a global standard setter, the IASB aimed to develop high-quality accounting standards. But as the IASB serves such a wide constituent base, they need help to gather and analyze the data to inform their standard setting. And I think here academics are well placed to play a very important role. This is especially so as often our research fails to be utilized by regulators, accounting standard setters, and practitioners due to the way in which our research papers are written. They're very, very theoretical, very long, and include so much methodological rigor so that they can be trusted by the academic community, but this makes it very difficult for non-academics to use these papers. By conducting studies with the IASB in mind during the design phase, I think this is an excellent way we can enhance the impact of our research and still get our academic papers out. We can write reports specifically tailored to the IASB and practitioner-focused media that pull out the key aspects that are important for those bodies. Then we can go and write the full-length theoretical papers that can be published in our typical academic journals. And I think this just maximizes the value and how far we can take our research. And so to this end, I want to briefly discuss a few methods that I think are well suited to helping the IASB. I've also provided some references just to help out as they can. So firstly, Take stock of what the ISB, of which ISB process you want to help with. Is it identifying areas for annual improvements? Is it considering what to add to the agenda? Or is it gathering and analyzing information for an exposure draft or post-implementation review? Because each have a slight nuance that you just need to be cognizant of in order to maximize the value for the ISB. Also, although I'm speaking about what the academics can do, a large part of what I'm going to say is still useful for regulators, professional bodies, and practitioners that just want to use their existing networks to gather information that they can use to submit to the ISB. So please don't drop off the call and make your coffee now. I think a lot of what I'm going to say will still be quite useful to you guys as well. Okay. Focusing specifically on the IFRS SMEs exposure draft. Upfront, remember your ethics. So in order for us academics to go and conduct surveys or interview people, we need to comply with our respective universities' ethical clearances. And for those of you not in academia, you have the awesome privilege of just being able to go and speak to everyone else without having to worry about these issues. And I must say, I really miss those days, whereas now every time I speak to someone, I need to first go and get an ethics clearance. So for the academics, don't forget about that. For everyone else, you guys are very lucky. The easiest way to ensure that your research is going to be helpful to the ISB is to use, in this case, the ED questions to guide your study. But it is advisable to look at the prior literature as well as the context of your specific country to see whether there are additional issues that you want to add or that should be included. And we've already heard from some of our colleagues earlier about what those issues might be it the education, the professional bodies providing support to those kind of aspects. Then looking at the methods that we can adopt. I think firstly, one of the methods I particularly like is conducting interviews, because here we focus on getting significant depth from a few people. And the real emphasis is on trying to understand the why and the context in which your interviewees are giving you the responses you're getting. These can take a long time to conduct, and so it might be worthwhile at your respective universities or across a few universities to break up different aspects of the ED and give it to different academics to go and conduct interviews, which can then give each of you a separate paper focusing on that small part, as well as a holistic academic paper, as well as the practitioner and ISB focused short paper that you can send to them. When you are doing these, make sure that you focus on highlighting the factors that might help explain why people are giving you the specific answers. So things like which country you're in, which industry, experience, qualification, education, and very importantly for this space is the availability of resources. That's an important aspect to get in order to really get useful insights from your interviews. When you're conducting the interviews, look for instances where interviewees either corroborate or contradict what you expected to see from the prior literature, what perhaps the ISB were thinking, as well as what other interviewees have said before you. When you do see these, especially where they contradict one another, make sure you get extra, or you go into much more detail in those areas, because that's where we're really going to get a lot of value that will be useful for the ISB. Other things to look out for is when people say never, do they really mean never or do they mean infrequently? When people talk about everyone, do they really mean everyone? And if so, what population are they representing in that statement? And these are what we're going to use to tease out those important insights. I think a really useful paper for those of you looking at doing interviews for the first time is Rowley 2012, and I've got that in the references. Next, let's have a look at surveys. I think these are best suited to gather high-level data from many people. So where interviews, we're looking at getting great, rich insights from a few people. When it comes to surveys, we're looking at basically getting coverage over a specific population or multiple populations. When you constructing your surveys, try to include alternatives to improve the insights you can gather. So for example, if we're looking at fair value, questions like to what extent does the proposed changes provide better information compared to what was already there, and tease out all of those little aspects. Likert scales are excellent and allow us to draw all kinds of inferential statistics, or use all kinds of inferential statistics to get useful insights. Again, spend time thinking about what factors you think will influence the responses. So in addition to just industry, country, in our context, or in the SME context, your net assets, net liabilities, and perhaps even the extent of tangibles and intangibles might be extremely helpful in trying to understand why we're getting certain responses. And again, that's going to be extremely useful to give to the IASB to include in their deliberations. The next method I'm going to quickly touch on is disclosure checklists. I'm a massive fan of these. Because you don't necessarily need ethical clearance in using publicly available information, you don't need to rely on other people completing surveys or agreeing to be interviewed, and you can really go at your own pace. The one downside in the SME context is, depending on your country, they might not require SMEs to make their financial statements public, in which case you probably would need to go and get ethical clearance to get some to get access to those private financial statements. And again, there we're trying to identify from a compliance perspective, are they complying? If they're not, which areas are they not complying, which can inform future research to have a look at why you're not complying. Is it because it's too difficult? Is it because of a lack of competence, etc.? The other thing disclosure checklists are good for is to understand what types of transactions and events are common in the SME environment in your context. And again, this is quite useful for the IASB in terms of helping them focus where their attention should be. I'm just looking at my time here. I'm going to quickly talk about case studies. So case studies is when you have a look at one or two companies or a few companies and you interview a range of people within that organization at different levels, as well as try to get your hands on as many documents as possible. I think it's best to look at multiple case studies, because then you don't run the risk of getting data that is so unique to one organization that it's not really helpful at the standard setting level. But things you want to look out for here, and again, in the SME context, we might find that those actually implementing the IFRS, the day-to-day accountants want less judgment, something that makes implementing the IFRS quite easy. But we might find those people going to the banks and applying for loans, they want more flexibility in terms of being able to present the economics of their company in a very, very tailored manner. I think that's about it from me. I hope this was useful. Over to you, Marianne.
Thank you very much, Wayne. I think it's been extremely useful showing the link between research and standard setting, and I think you've provided very useful suggestions on methods, and what academics can do and how they can do it to make sure it's useful to the IASB as well as to the academics itself. So thank you very much for your sharing of your views. Our next academic then is Dr. George Taki. So I'm going to hand over to you, George.
Yeah, thank you, Marianne. And greetings from Ghana and from the University of Cape Coast. Just ranked #1 university in West Africa and then #4 in Africa by the Times Higher Education World University Ranking. And my reflection on the exposure drafts that the third edition of the IFRS for SMEs. We know that over the period that the standard has been in use, the challenge for most practitioners has been to understand the standard. And I believe that academics can then bridge that gap by making it understandable to practitioners. Even the SMEs themselves that this standard has been developed for, it is important that we find out the extent to which they are aware of the standard and the extent to which they are complying or willing or ready to comply with the standard. So that's a perspective from which I would do my presentation. I'm not going to use a slide, just some few minutes, and then I'll be done. So we know that the IFRS for SME standard is a standalone accounting standard, which is designed to meet the needs and capabilities of SMEs. If you compare it with the full IFRS, it is less complex, as topics that are not relevant to SMEs are omitted. In addition,
sorry, just a quick mention. Can the slides be removed, please? The previous slides from Wayne. Apologies, George, because I think the slides are still appearing.
Okay.
Oh, thank you. Excellent.
Okay.
George, go ahead.
All right. Yeah, thank you. So compared with the full IFRS, it is less complex, as topics not relevant to SMEs are omitted. In addition, principles for recognizing and measuring assets, liabilities, income, expenses in full IFRS are simplified, and significantly fewer disclosures are required. It is important that we conduct research to find out the extent to which SMEs, particularly on the African continent, are complying with the standard, the extent to which they are compliant. The IASB, we know, have maintained periodic reviews since 2009, the second edition issued in 2015, implemented in 2017, and then this third edition, trying to get process improvements over the previous standard. And I have paid particular attention to the standard reviews since 2009. And I want to refer us to two book chapters in a book that was published by Sun Media, Metro, under the Sun Press imprint. The book was edited by Marian Rose and Leslie Steinbank, Accounting and Auditing Practices in Africa. It's a good start for researchers that want to find out the extent of adoption of IFRS on the continent, because it is possible that even as we speak, we do not have quite a number of countries on the continent fully adopting the standard, and even its implementation so far as SMEs are concerned. And so that work, that book, the first chapter of the book had a chapter by Leslie Steinbank, the adoption of IFRS for SMEs by African countries, was an exploratory study. In that work, which I want to refer to, Prof. Steinbank provides an analysis of the adoption of IFRS for SMEs in Africa, and she used desktop archival research, analyzing the IFRS application around the world, profiles, and also the relevant reports issued by the World Bank. And then she framed her analysis using institutional isomorphism. And so if you look at the isomorphic pressures, we still have to find out the extent to which the isomorphic pressures drive they are being coerced to follow to, or to ensure that SMEs adopt the metric isomorphism to show or to provide evidence
George, I think the connectivity is a bit of a problem. I wonder if you shouldn't maybe switch off your video and see if that helps.
Okay.
We missed the last 2 minutes or so, please.
Okay. Is it better now?
Yes, thank you.
Yeah, thank you too. So so I was on the work by Leslie Steinbank on the adoption of IFRS for SMEs by African countries. And I was talking about she using the isomorphism theory to show, provide evidence that institutions like IFAC, International Federation of Accountants, the Pan-African Federation of Accountants for professional bodies, have kind of helped to, improve on adoption rates on the continent. Then in that book, the second work chapter of the book was a work I did in 2015, showing the extent of compliance using the presentation and disclosure compliance by SMEs in Ghana. So I used the content analysis of the financial statements of SMEs, okay, to understand their level of compliance, using the presentation and the way by which academics can also find out the extent of compliance with the standard, because that would ensure that we are gauging the extent to which SMEs within the continent or elsewhere are adopting the standard. So the work that I did showed that about 66% of the sections of the IFRS on SMEs presentation disclosure requirements were applicable to the SME study. And that's what I made in my initial submission, that it is possible that even though, so far as our context is concerned, it may not be fully compliant or fully relevant to the SMEs within our jurisdiction. And so it's important that we look at that as well. Let me wrap up by saying that the overriding objective in this process is to ensure, by so doing, we want to improve upon SMEs financial reporting quality. And that is what I believe that the IASB seeks to do, that the financial statement that SMEs would come up with, because hitherto some SMEs have not used the standard in their reporting. And so this being the third edition, it is important for us to conduct research and get to gauge the extent to which their financial statements are showing fair and faithful presentation, and hence improve SMEs financial reporting quality. Thank you very much.
Thank you very much, George, for your views and sharing some of the literature. Anna, I've noticed Usai has now joined us from PAAFA. So I was wondering if we should give him the opportunity to use his 10 minutes before we hand over to you, if that's okay with you.
Yes, let's do that.
Okay. Usai, please go ahead. Thank you.
Thank you so much. In fact, I want to apologize for coming late. I actually missed up the time, and I saw the emails coming from other colleagues. I thought that it were to have started at 2 p.m. By my time, but it's as if it's 12. And so I have to actually travel from one place to the other to be part of this meeting. So I'm so sorry for coming in very late. Good.
No problem. Please go ahead.
Okay, good. So let me just share my slide from here. I'm sure I have to be allowed to share. But basically, to look at PAAFA's response to the third review of the IFRS for SMEs Accounting Standard. I don't know whether I've been allowed now to share. If not, let me just go ahead and
yes, you can share your slide now.
Yeah, I can share now. Okay, that's fine. Good. Yes, good. So I think yes, it can be seen from here. Good. That's fine. Good. Now I want to look at the 15 questions that we have to answer in regard to the third review of the IFRS for SMEs. And I just want to go straight ahead and start with the first question on the definition of public accountability. And we all know why there is this proposal to list banks, credit unions, insurance companies, securities brokers and dealers, mutual funds, investment banks, as examples of entities that often meet the second criteria of public accountability in paragraph 1.3. And also proposing to clarify that an entity with these characteristics will usually have public accountability. Now, our response is that there's still room for further clarification, specifically for entities holding funds in trust for clients like attorneys and estate agents. In some jurisdictions, they hold funds in trust for their clients, and whether in this capacity they will fall within the scope of holding assets in a fiduciary capacity, and therefore constitute an entity that have a public accountability. And we also have issues with the providing example, the listing, that is not exhaustive, because in some jurisdictions, we have electronic money, what we call mobile money firms. They actually operate like a deposit-taking institution, like banks. And so if we are listing and we made a list exhaustive, perhaps these entities might be left out. They are also very critical in the area that SMEs operate. And so we are also proposing that perhaps we shouldn't make the list exhaustive because it can include other entities that might fall within the remit of entities having public accountability. That's our response to the question number 1. Let's move on to the question number 2. Now, with the question number 2 is about concepts and pervasive principles. And here IASB is a question for information, views on aligning the section 2 concept and pervasive principles with the conceptual framework for financial reporting issued in 2018. Here we agree with the approach that is being taken, and we believe that that achieves better consistency with the full IFRS, and that achieves the alignment objective that was set by the IFRS IASB on the review of IFRS for SMEs. It's also a view that this will also be helpful for those using the 2 standards, like those who are auditing both companies that use for IFRS, and also companies that use IFRS for SMEs, and even group of companies where subsidiaries have to use IFRS for SMEs and then others use for IFRS. For consistency's sake, we agree that we should align the 2 standards, section 2, and also the conceptual framework for financial reporting. Then we go to 3. Here we agree to the alignment. We support it. We also support the rebuttable presumption that has been proposed by IASB. Now we go to the 4, proposed amendments to impairment of financial assets in section 11, basic financial instruments, rename financial instruments. Overall, we, given the concerns that many, even those who are applying for IFRS have, applying the ECL, the expected credit loss, it is our view that the board should consider including an illustrative example on how to apply the simplified ECL model. And that will assist SMEs in determining the information requirements to enable them to put it together in an appropriate, easy ECL model. So that is our proposal for the question number 4. The question number 5 is on the section 12, fair value measurement. And we do not have any specific comments on this. Overall, we are comfortable with the new section 12 as it achieves the alignment objective and will allow for comparability. So we go along with the IASB, and it requests for information asked on aligning the standard with IFRS 13 fair value measurement. In fact, it's long in coming. And so we support it. Then there's question 6 on proposed amendment to section 15 on investment in joint ventures, renamed joint arrangement. Here we agree with the proposal to align the definition of joint ventures to IFRS 11, and retain the section 15 on classification and measurement. And our view is that this will be very simple and easy to follow. And so we should not create any complexity at all for preparers of financial statements. And so that is what we also want to bring across. Question 7, on the proposed amendment to section 19, business combination and goodwill. Here we agree with the proposals made in this section. However, we are not in agreement with not including the guidance related to reacquired rights. It's our view that we cannot make an assumption that this guidance will not be relevant to entities applying the standards. And because we are talking about SMEs, I think that the guidance will be necessary for them to be able to go by the requirements of the standards. You know, when we talk about the SMEs, we have those at the upper level and those at the lower level. Those at the lower level, of course, for some jurisdictions, they have a watered down version of even the IFRS for SMEs for them to feel comfortable applying. And so if we want to propose amendments so that we can align the section 19 business combination and goodwill with the acquisition method of accounting and IFRS business combination, then a guidance will be very necessary to guide them to be able to apply the standards. On question number 8, on renaming revenue, section 23, revenue to revenue from contract customers to align it with IFRS 15. Here we agree with the proposal. Yes. It's to simplify everything, as I said, for those who are dealing with entities that apply both standards. But a concern that we do have is that the section is quite lengthy. And although while fairly straightforward, it may still be potentially daunting, especially for SMEs. Another point to note is that due to the volume of the session, it may be very difficult for SMEs to follow. So we believe that it will be helpful for smaller scale entities with more simplified operations to have a watered down version of it. That is similar to what we have in IFRS 3. That will allow preparers to still apply the 5-step model that will simplify the manner in which these standards are applied, so that we can avoid working through extensive detail. That's why we are trying to avoid anyway by having a watered down version of the full IFRS. And so we shouldn't overburden them with the details. A simplified version will be very good for them to apply. Now, when it comes to the question number 9, the proposed amendment to section 28 employee benefits. From PAAB's perspective, we are not aware of a widespread application of defined benefit plans across the jurisdiction. And therefore, we are not so much don't have any much comment about that. But we are, however, of the view that to the extent that the entities that still apply this section, then the wording should be retained in order to provide the requisite guidance that is needed to apply this section of the standard. Now, for the transition, we agree with the transition requirements I propose and welcome the relief that it will give to preparers of financial statements. So we have not much comment on it. We agree with the proposal. We don't have any comments also on the other proposed amendments. Yes, because it summarizes the proposals, and so I mean straightforward, very easy to understand. So we go with it. Now with the question 12, that seeks to align section 20 leases with IFRS 16 leases. Here, we support the decision to consider amending the standard to align it with IFRS 16 and the future review of the standard. on the basis that currently the perception around IFRS 16 is still negative and daunting, especially for those applying IFRS for SMEs. And so from a cost-benefit perspective, we do not believe that for a typical SME, the cost of applying IFRS for SMEs will be significant, so that the benefit will, in most cases, outweigh the cost. And so we go with it that it should be aligned. Then with the question 13, recognition and measurement requirements for development costs. This also, we support the introduction of an accounting policy choice that permits the recognition of tangible assets arising for development costs. And the criteria specified are considered simple enough to apply. And so we go with the amendments that are being proposed. Then question 14 also, we agree with the removal of paragraph 22.7a as proposed by IASB. And so we don't have that comment about, but we agree with it. We go along with it. Then the last question, question 15, updating the paragraph numbers of the IFRS for SMEs Accounting Standards. Here we support the approach taken to retain the numbering of deleted paragraphs. And so for us, we don't have much issue about that. We go along with it. We support what IASB is proposing. And so this is our response to the questions that were sent to PAAFA. And so if there's any question, any contribution, I'm here to take them. Thank you so much for listening.
Thank you very much, Usai. I think we will keep the questions for the last part of the session. We will now move to part 2, to Anna. She's going to talk to us about how to respond to the IASB consultation. Thank you, Anna.
Thank you, Marianne. My name is Anna Simpson. I'm a member of IASB technical staff, and I work in stakeholder engagement with the focus on academics and preparers. So I will speak to you about responding to IASB consultations. And this is we included this section in the workshop due to demand from both our hosts, the African Accounting and Finance Association, and also the PAAB, the National Standard Setter of Zimbabwe. So I'm going to Yinka, I have difficulty moving the slides. Actually, I'm not sure if it's because I'm not sharing them. So if you can help me with that. Yes, thank you. So I will speak a little bit first about how consultation informs the IASB's work, just to set the context for then speaking about a comment letter process and what actually makes a good comment letter. And then I will briefly discuss some possible challenges to effective feedback and what are the steps that the IFRS Foundation is thinking in order to address them. And before I move on, I wanted to remind everyone that feel free to put questions in the chat, not only on this section, but on the previous IFRS for SME section, because after this second part, we'll move to Q&A. So if we go to the next slide, and then the next one. Thank you. So how do public consultations inform the IASB's work? The IASB and now its sister board, the ISSB, work in the public interest, and the mission is to create high quality standards. And in order to be able to do that, the IASB needs to engage in consultation with its stakeholders, and this needs to be done in a transparent way. So this consultation can be carried out through various means, comment letters, or it could be through surveys, individual meetings with stakeholders, or public roundtables and other forms. So far, the comment letters are the most established way to consult the stakeholders because they represent well thought through responses to the formal consultation, and they definitely ensure transparency because as soon as of the process, because as soon as the comment letters are received, submitted within 5 days, they're uploaded on the website where everyone can see who has responded to the consultation and also the content of the comment letters. And if we can move to the next slide, please. The comment letter process is required by the due process. That is the sequence of steps that the IASB follows in developing the standards and in consulting with its stakeholders. And as I already mentioned, its aim is to ensure transparency and also inclusion of all stakeholders. And normally when consultations are published for comment, there is a period which is set by the due process handbook for each of these consultations. For example, with exposure drafts and discussion papers is 120 days, with annual improvements is 90 days, and etc. The period depends on the type of consultation. And after the consultation, the feedback based on the comment letters is summarized and eventually taken to the board for deliberation. And if we move to the next slide, I have illustrated the steps of the comment letter process. So first, as I said, letters are received and posted on the website. And then the team that works on the particular project would go through these letters and code them by questions, and they would also code the contents and produce some statistics, which are then shared with the board, and there is further analysis later on. And usually the analysis is reported in a technical staff paper and is deliberated. The deliberation is usually in 2 stages. If we move to the next slide. Next slide, please. Oh, sorry, there was a bit of a delay. If we go back to the previous one. Yes, so the feedback from the comment letters is initially summarized to show what, for example, the demographic information of the respondents is, what are the summary of the responses by question or by topic that is set out in the consultation document, also explanations of how this feedback is quantified, and any observations about particular trends emerging from the feedback. And then later on, this feedback is followed by more detailed analysis at this stage that relates to particular aspects of the consultation paper. And this is very important because the the evidence and the explanations, the answers that respondents provide in the comment letters, then guides the board in whether to proceed with the proposals that are in the consultation, to modify them, or sometimes withdraw some of these proposals. If we move to the next slide, please. Thank you. So as I showed you earlier, the comment letters are not the only source of getting feedback from the stakeholders. Usually, this is supplemented by a number of outreach activities. And the idea is that the feedback should be global and represent a wide variety of stakeholders, and there shouldn't be any group that is underrepresented. There is particular focus in that regard on investors, because the due process handbook says that there is investors are often underrepresented. Therefore, there has been a special effort over the last 10 years or so by the foundation to reach out to this group and inspire them to submit a letter. If we move to the next slide, please. So this graph shows the different ways of reaching out to stakeholders, which supplement the comment letter process. It could be outreach meetings or online surveys, field work where, for example, companies are asked to implement in their financial statements certain proposals, public hearings, or workshops like this one. And usually these forms of outreach sometimes have educational purposes, or they could have the purpose of listening and getting feedback. And as I said, the purpose of this is to for the board to get an idea of what areas they should focus on within the proposals, which areas are perhaps not going to do not resonate so much with the stakeholders, and what should the project progress with before finalizing the standard. And if we can move to the next slide, please. So here on this slide, I have provided some information on engagement with academics, ways of getting feedback from academics, not only because this is one of the co-organizers of this workshop is an academic association, but also because this is one of my roles in the IASB. And this is very related to what Wayne was speaking to us about earlier. We do this, he was providing insights on how academics can get involved from the academic side of things. And hopefully this slide will give the academic audience in this workshop a few ideas of how they can get involved with us. So we perform workshops like this one on different consultation documents that the IASB has out for comment. And we work with a number of academic associations around the world. This is a way to get some idea about the existing literature and get some academic reflections like we've heard today. But we also have sometimes we anticipate consultations. For example, the post-implementation reviews of the 3 main standards on revenue, financial instruments, and leases. We organized a few calls for research well ahead of the start of these PARs, because we all know that academic research takes a long time to produce a paper and come up with the idea. So we've had a few special issues with academic accounting journals, and also we have the IASB Research Forum, which takes place every year, and the topic for next year is going to be on intangibles, and intangibles is one of the projects that is going to be added to the IASB agenda within the next, at some point within the next 5 years, because this is one of the topics that came through the agenda consultation from last year. And of course, stay in touch, check out the projects on the IASB work plan website. So now that I've said the background, I want to show a few observations from the experience of the IASB and the IFRS Foundation of what constitutes a good comment letter. So if we can move to the next slide, please. And the next one. So you may be familiar with some of these points on this slide, because they appear in every consultation document. They are also on the website of the IFRS Foundation, and they are mentioned in the due process handbook. So to the IASB, a good, and to technical staff members who analyze the comment letters, a good comment letter would respond to the questions as stated. And this may be self-evident, but there are examples of comment letters that perhaps may diverge away from these questions and talk about broader topics. So it is very important that respondents stay focused on the questions that are asked, and it would be even extremely helpful if they refer to the paragraphs in the consultation document that the answers relate to. Of course, it is always very valuable to provide good quality arguments. In other words, to provide the rationale for the views expressed, and particularly if there is any related evidence. And it is also very helpful if the comment letter identifies any issues with the wording of the proposals that are, for example, difficult to translate in a certain jurisdiction. And if, for example, there is disagreement with the views expressed in the proposals, it would be very helpful for respondents to state what their alternative views or propositions are. And sometimes respondents may not have a strong conviction or answer a view about all the questions in the consultation document. So it does not mean that an incomplete comment letter is not a good comment letter. If you have evidence on a subset of the questions in the consultation document, then this is also fine. And then if we can move to the next slide, please. And because we have our hosts, co-organizers of these workshops are representative of a national standard setter and academics, I have provided examples of what good comment letters by national standard setters would include, for example, this would be work undertaken by the national standard setter or regional body, or views of the constituents within a given jurisdiction, and based on that, the analysis and recommendation to the IASB. And as far as good comment letter sent by academics is concerned, this is academic papers are a very good source of evidence for the IASB because they often provide statistics or more analytical evidence. But just as when writing a literature review, it is important to acknowledge both sides of the argument. I think it will be helpful to provide balanced citations of the academic literature, both for the argument in support and argument against, and then explain why you support the view that is expressed in the comment letter. In other words, why the arguments in favor outweigh the arguments against. And obviously, at the end, what your recommendation or what your analysis is to the IASB. And if we move to the next slide, please. And this is something very important that has emerged from the IFRS Foundation's experience in coding a lot of comment letters. Again, here I draw a parallel with writing a good essay. I have an academic background, so I have always emphasized this to my students previously, that having a good structure to a letter, to an essay is very important. And in the context of the comment letters, it has been noted that the most effective comment letters would have a cover page that summarize the answers to the questions in the consultation document, and then have a detailed appendix cross-referencing these answers and providing the detailed evidence and explaining what underlies these arguments. And if the comment letter is structured in this way, then the quality of the analysis and the strength of the argument comes much more clearly, comes through much more clearly and more strongly than a comment letter without a good structure. Can we move to the next slide, please? And here, just briefly, I would like to go through, these are characteristics of effective feedback. It does not necessarily have to refer to comment letters, and I will spend very little time on that because I'm aware of time. But effective feedback is broadly represented by a wide range of stakeholders, and this is next slide, from different backgrounds and different areas, different jurisdictions, and also the feedback is high quality. That's on next slide. So here I have a number of characteristics that would characterize high quality feedback, and a number that characterize not so high quality feedback. And again, this comes down to the strength of the argument, the providing supporting evidence, sticking to the questions that are asked in the consultation, and refraining from having providing too unrelated evidence, which is based on an overall feeling or opinion rather than evidence. And if we move to the next slide, please. Transparency is also a key feature of the feedback, and that's why, as I mentioned earlier, comment letters are a key way of getting feedback, because they help increase the credibility of the process. If there are meetings with individual stakeholders and these meetings are private, then the feedback from the meetings is presented to the IASB and deliberated in public meetings, but there is always the danger, the risk that some stakeholders feel that these are not their words reflected in the summaries of the feedback, but rather the words of the staff preparing the papers. And then if we move to the next slide, please, just to touch quickly on getting involved earlier in the process. As you're probably aware, the each project goes through different stages from the research phase, where the different options for a solution are researched, then a discussion paper out of for consultation, exposure draft, where already the particular proposals are included, and onto another consultation, and finally developing the final standard. So it is key that involvement is early in the process, but it's also key that the feedback that is provided corresponds to what is required in that particular process. For example, in the research phase, where different solutions are being sought, there may be more place for theoretical or philosophical arguments in supporting a given view, whereas if the consultation is an exposure draft where there are specific proposals made or models, let's say, there is perhaps less scope for making wider philosophical and theoretical conceptual arguments, but rather providing feedback on the specific proposals. And now I'll just move to the third part of this presentation on responding to IASB consultations. And if we can move to the next slide, please. So there are certain challenges to engaging in the comment letter process, and the IFRS Foundation is trying to be very receptive to those. For example, that respondents may need advance notice of publication dates in order to be able to factor in the time for response, or the submission process may be inefficient or inaccessible to some respondents. It could be a case that some respondents are not comfortable with the lack of anonymity on the public website. And next slide, please. And for some respondents, comment letters may not be the optimal way to provide feedback, and some stakeholders have suggested that the comment letters are becoming an outdated format for feedback. So I will skip the next couple of slides. Yes, and next one. Yes, so the two slides that I skipped in the interest of time were showing examples of the use, the supplementing of comment letters with a survey. One was during the third agenda consultation last year, and the second example was with from the IASB the 2 exposure drafts that they had out for public comment earlier this year. They also were supplemented with a survey that replicated the questions in the exposure drafts. So they were basically a compartmentalized form of feedback provided. And then based on the analysis of the feedback coming from the comment letters and the surveys, some challenges were noted, for example, with comment letters that do not have their questions that refer to particular sections of the consultation document, whereas with surveys, this was much easier to code. And so on. And that's why this is one thing that the IFRS Foundation is considering, whether surveys should be used a little bit more to gather feedback in order to make the process more efficient and the overall analysis of the feedback more effective. And now I have one last slide, please. And then another thing that the IFRS Foundation is considering in order to facilitate or to help stakeholders in providing feedback is to provide suggestions on how to structure responses. And this goes back to what I said and the slide I showed you on a comment letter that is structured in a good way. And also another idea is to include a link to the materials where the consultation is published on the website, and also a video with every consultation that shares these tips, and also on how to respond, and also with regards to the content of the consultation. So I'm going to stop here and pass to Marion, and I think it's going to be also Admire who is going to moderate the last session. Thank you.
Thank you very much, Anna, and I think very useful for participation in the consultation process, and I'm sure people will take note and visit your website. Yinka, if you can make sure Admire is also a host now, if he's not yet, then I'm gonna ask, there he is. I'm gonna ask him then to moderate if there are any questions. I have noted none in the chat box, so I really want to invite our participants. You have been so patient to bear with us for 2 hours almost now. So please use this opportunity to get clarification or ask more questions. Thank you, Admire.
Thank you, Marian. Good afternoon, colleagues. So we now have an opportunity to ask questions to any of our panelists. So if in terms of protocols, if you can raise your hand, and then we'll give you the opportunity to ask the question. And if possible, if you can then try and direct your question to a particular presenter or panelist. Thank you. Or alternatively, you can type your question on the chat box and we'll take it to the presenters. I see Anis Sudaka. You have your hand raised. Please unmute and go ahead.
Thank you so much. I think I'll take off the video. Thank you so much. I just wanted to come through on the emphasis for SMEs and its adoption, and probably not necessarily hitting much on the issue of its adoption, but probably focus on ways in which we can help with adoption I think as pointed by the previous speakers, the key issue is that from practitioners who are preparers, I'm sure if I were to go around, when I look at Zimbabwe, where we probably have adopted and have that as a framework, not many would know, or if they knew, they may have forgotten. So it's probably finding the key points, like one that has been pointed out, the banks, the associations, the SME hubs, and encourage the use of that framework, and probably even some training for those key drivers of those associations, because of the benefit that has been pointed out to improve access to financing and fair presentation, and also the growth of the SME industry. So there are benefits definitely to do that. On the education side, I see a very big opportunity. I've seen others using the emphasis for SME. So the first thing that they do when they introduce that's from now the PAOs and educators or tuition providers, they do lay out the whole landscape of standard setting as far as reporting is concerned, and emphasis for SMEs is brought in. And at the lower stages of learning, let's say when you're doing a degree in accounting, the lower stages, they do use or introduce the emphasis for SMEs as the framework for reporting simple financial reports for simple organizations, as a way of introducing basic accounting. And as they go the ladder, going up in the more complex areas, our time. I think if we follow on that, which means looking at the syllabus, is looking at the qualification drivers like the PAOs and tuition providers, and encourage that, as well as the industry, we may achieve. I think there's still a little bit more that we need to do. Thank you.
Thank you for those comments. Maybe if I can take one more question and then ask Anna and Anne, they are still on the call, to comment on the interventions. I see Alice, you have your hand raised. Please proceed.
Thank you very much, Admire. For me, I've got two questions. Nico, on IFRS SMEs, I don't know how, especially from an IASB, whilst I appreciate the need to maybe review the framework once every 5 or so years. What it's also meaning is that preparers are having pay for implementing quite a lot of changes at the same time, especially when you begin to look at this particular review where you're looking at IFRS 15 alignment, you're looking at IFRS 9 alignment, you're looking at all these standards. I think for me, isn't that already adding to the complexity where we are trying to simplify things? So I don't know how that is weighed against, obviously, the need not to be changing it every often, but the fact that when you're changing it, and there's only 2 years to implement all this range of changes. I think that is the question that I just have, even from an IFRS for SME. Then to Anna, it was on just to try and understand how, as especially comment letters come to the level of importance that is taken to, say, jurisdictions that are facing an issue. Is there some kind of a weighting to say you're going to listen more to this particular jurisdiction In Zimbabwe, we've had our own fair share of experiences. We're probably one of the few countries now that's experiencing hyperinflation. So does it mean if you're really looking to say at IAS 29, are you going to pay more attention, we say, as compared to the rest of the world? How does that work? Sometimes the feeling is issues are not quite hid when, especially in instances where you're really experiencing this a particular issue. Then the standard comes out, it's not quite addressing that which you're looking for. And then the second question is, how do, for example, from Zimbabwe, is it better to have a response that consolidates different views from different constituencies? Would you rather those different constituencies submit their own comment letter separately? Is it going to be the same? For example, if we've got a constituency of, let's say, 8 or 9 borders, if we do one response, is it going to carry the same weight as compared to all these other 8 bodies submitting separate comment letters? How is that sort of taken into account? Thank you.
Thank you very much for those 2 questions, Alice. So maybe if I can invite Anne to come in and look at the comments from Anesu and the questions from Alice.
Thank you.
If you can prepare further questions. We do not have opportunities to have IASB members with us to respond to questions. Thank you.
Yes, so I'll take those first couple and then Anna can take the couple that were addressed to her. So the first question is about the training, and that's come out through some of the presentations as well. And this is a very key matter. I can't agree more with the speakers who identify the issues here. Firstly, we heard about entities choosing to use full IFRS rather than taking advantage from IFRS for SMEs because of the lack of expertise and understanding. So I appreciate that feedback, and I think there is a real case for more education, and that education starts with universities, and there are some universities that are doing a terrific job in terms of IFRS training, but we would encourage people to also include materials on IFRS for SMEs so that people can understand the relationship. And secondly, there was been mention of the professional accounting associations where so much of the training goes through there, particularly the CPD. So we can only encourage people. From our side, we will be looking at the education materials that accompany the IFRS for SMEs. We've had training materials on our website for many years, and they have been widely used. So it's one of the things as we do this project now and consider the reviews, we also think about the training materials, and that hasn't been decided yet, but we need to look at that and make decisions around the training materials. In terms of the second question from Ellis about many changes at the same time. So yes, in this review, there are many changes at the same time compared to the previous review. And that's a function of the activity level in IFRS full accounting standards. And the board has considered very, very carefully the extent to which changes should be made now and how many could be deferred. And as we've seen in today's presentation, some of this doesn't come into effect till 2026. So it's a long lead time. So we do hear from stakeholders that people like a long lead time. They like time to get their systems ready. There are costs involved in changing accounting systems. We're very aware of that. On balance, for the board at the moment, the preference is to do this as a package of changes so that people can make their system changes once. If we were drip feeding in changes or doing less changes this time, well, doing less changes this time won't stop the system changes. Doing less changes might be less work, but the systems will still need to change. And for some entities, it's easier to get the budget to do the system changes at once rather than going, well, we do some system changes and then in 3 years' time or whenever, we're going to have to do them again for more changes. So it is something we've considered, and we are very aware of the costs for stakeholders and the effort and resources. We've heard a lot of feedback on the big standards, revenue, leases and financial instruments, because we've been getting involved in PIRs on them. So we hear a lot about what's involved for preparers. So we're very aware of that. But on balance, at the moment, we think that it works better to have a large number of changes now. The other aspect to it that board has talked about is that if we didn't bring in those changes now, it would be a very long time before IFRS for SMEs could have the benefit of that new thinking that's in IFRS full. Now, some speakers today have talked about the fact that they're closely related, and some people go, they use IFRS for SMEs, but they then also use IFRS full as a later stage. So the more there is a separation between IFRS full and the IFRS for SME standard, that imposes costs on different people as well. So there's a lot of issues to think about, and we've tried to evaluate them, and we get to the decision that we do. So thank you. Thank you for those questions.
Thank you, Anne. Anna, if you can come in.
Thank you, Maya. So the question about whether more weight will be put on comment letters that come from jurisdictions that face an issue. And also the second part was whether response comment letters should be consolidating evidence from different constituencies, or each of those should send a letter. I can basically what matters in good comment letters, and I think that will answer both questions, is the quality of the evidence and the strength of the argument. The frequency does not matter of how many comment letters are sent, but just because essentially if the evidence is similar from several constituencies, it will be summarized eventually for the for presentation to the board. So it is not necessarily a matter of whether a jurisdiction is facing an issue or not, or how many letters are received. What matters is, again, going back to these criteria discussed earlier, the quality of the evidence provided. This is a principle that applies to all consultations, but I don't know if Tiniko or Michelle want to add something in the context of IFRS for SMEs specifically.
I agree with everything you've said, and I think in the IFRS for SMEs world, it's always difficult to get the feedback from users, so the lenders and creditors. So if you are able to obtain any feedback, it's useful if that is highlighted separately.
Thank you, Michelle. I hope this answers the question.
Thank you very much, Anna and Tiniko. Colleagues on the call, any further questions for our colleagues from the IASB? Any further questions?
Secretary, Admire, I don't know if I understand that IASB also does work with, let's say, reporting software providers. When there are certain changes, I think I picked up that when we're talking to the IFRS 17. Now, when you look at IFRS for SMEs, there are quite a number of software providers in that space. And then one of the biggest wins is to be able to support those to provide such a module or such an application, which would automatically be available for those that are reporting using those packages. I guess some of those what we call infrastructure or resources do influence where people end up reporting. So in other words, people automatically take a software, be it Pastel or whatever, that is on full IFRS, whereas they
Okay, I got the first part of the question, but missed the tail end in terms of having software suppliers, reporting packages of suppliers working with, or the IASB working with the suppliers in terms of having modules or packages that work with, that can support using IFRS for SMEs. Maybe Anne, if you can take that one.
Yes, certainly, Admire. The software providers, to our knowledge, follow what's going on and prepare materials. So, for example, if we think about the leasing packet, the leasing standard, there were specific software providers who worked on creating the software that would follow IFRS 16 and would provide for IFRS 16. For the larger companies, they also made amendments in some cases for situation-specific, entity-specific things. So I think that that's something that's happening, that's going on. That what we're proposing is being monitored, and software providers are engaging in getting materials ready. The lead time will obviously help them with that, but because they have a product to sell, software providers are keen to provide software solutions. So as we work on our standard and make clear what's going to go into the standard, what the changes are for IFRS for SMEs, that will be something that the software providers will be able to pick up on. Thank you.
Thank you for that response and comments, Anne. There's a participant by the name of user. Please, if you can introduce yourself and ask your question. Thank you.
Okay, thank you very much. That's an interesting designation. My name is Elliot Chatima. So yeah, I did a presentation earlier on, but mine is just I don't know, it's a brainstorming issue to say, to what extent are we engaging the tax authorities? And as I understand, some of the treatment of transactions who have a bearing in the actual transactions would have to be
Elliot, I can't hear you clearly. I don't know if the colleagues, you can hear him.
No, I can't hear the question. I can't hear Elliot.
Maybe
Perhaps
if we can ask,
put it in the chat.
Elliot, may I request that you put your question or comment in the chat? In the meantime, Osei,
hello,
you had your hand. Please proceed.
Yeah, so I was saying that this is just a brainstorming issue to say, how are we engaging the tax authorities as far as, and also tax practitioners in particular, to be able to understand the implications of IFRS for SME, especially how certain transactions are going to be treated and the actual computation of taxes. That was my question.
There's not any action from the IASB side on that, very much because it's an application question and it's very country specific, but I would expect that's something that's being picked up by the professional accounting associations, where their members are very interested in those application questions, and particularly tax application questions. Thank you.
Okay. So do I have the floor?
Yeah,
Hello, do I have the floor?
I'm not sure. Osai, is
Okay.
just let me just ask Amir, can you just take down the question slide, because then we can see more people on the screen and it'll help us to see who's speaking and so forth. Yeah. Thank you. Yeah. Yes, that's great. Thanks.
Yes, I want to start by appreciating the enormity of trying to develop a global standard that meets the demands of every constituency. It will not be easy, I know. And so definitely along the line, others will feel it. And so these comments should be expected. But I want to make a suggestion here. When it comes to review of standards, those who can really assist in the process are the preparers of the financial statements. Those who really prepare the financial statements using the standard. Yeah, those of us in academia, maybe the CFO, the CEOs, yes, we can make our contribution. But those who really understands the application and the difficulties that they're in applying the standard are those who really prepare the financial statement. So I would suggest that we engage these individuals regularly. If you can create a forum for preparers of financial statements so that they can tell us so far what are some of the challenges that they face in preparing a financial statement. I think that will go a long way in shaping the course of the standard setting.
Thank you, Osai, for those comments. I'll make a few comments and then I'll ask Michelle and Tinyiko if they would like to add. I agree with you that hearing from preparers is key to the standard setting process. And so there's a couple of ways that we do that. And we do have an IFRS for SMEs implementation group, the SME implementation group. And we hear regularly, we have consulted with them over the issues firstly in the request for information, but also in the ED, all the things that are being proposed. We also consult with our other consultative groups, such as ASAF, and we have ASAF, that's the standard setters. They have members, and their members consult with preparers in their jurisdictions. So we hear from preparers that way, and we hear from our implementation group where there are preparer members as well. So that's two ways where we have conversations, quite in addition to hearing from view the comment letters. But yeah, good. It's a good point. We do want to hear how things work for preparers. Michelle or Tinyiko, do you have anything you'd like to add for this question?
Maybe not add, but what I could do is explain how we developed the revenue section and how we reached out to preparers. So in the request for information, we asked for views on different approaches to updating the revenue section. And then during that period and in the period we've subsequently been developing, we had discussions with our SME implementation group, which includes some preparers. We had discussions with our emerging economies group of national standard setters, and they reach out to preparers. We also actually spoke to some of our global preparers that had already implemented IFRS 15 themselves, so we could learn from their experience. And we spent some time talking to both the mid-tier firms and the larger firms, talking about some of the application and implementation challenges. So we particularly focus sometimes on the mid-tier firms when we're developing the IFRS for SMEs standard, because they're obviously dealing with that population of entities that we're trying to capture. So we do quite a lot of work focusing on the SME preparers.
Admir, while we're waiting for further questions, I did have a question come through to me on the chat asking about how we can get involved with the public accounting organizations are promoting training in relation to IFRS for SMEs. And so there is the ability to for public accounting organizations to influence IFAC and the education standards that a body of IFAC's involved in. So I do agree that having more recognition of IFRS for SMEs as a standalone standard that belongs to the IFRS Foundation and is used globally, having more recognition of it and promoting more education of it, I think that is a very, very valid suggestion. There is a lot of attention on capacity building through our sister board that's been mentioned today, the IASB, and there are many countries that are concerned about capacity building in relation to the ability of countries to respond to the new sustainability standards. So it is possible to introduce new things and to build up the profile of things. And with this extra focus from the IFRS Foundation for capacity building, I think this is a good way of raising the profile of the suite of standards, and that the IFRS for SMEs is required or allowed in many jurisdictions, as we've discussed today. And so the more the profile of the standard is recognized, I think the more that training will follow from professional organizations. And so that is something that people could raise with IFAC in terms of getting it into the education standards. Thank you.
Thank you very much for that comment. And so for Zimbabwe in particular, the IFRS for SME became available or allowable for use with effect from 1 January 2011. We went further and actually prescribed it in law with effect from 2019. It's actually part of our laws, reporting laws for this country. So yeah, that's on the IFRS for SMEs. On the IASB standards, you might be aware that Zimbabwe is one of the first movers in terms of early adoption of the standards. That call was approved on the 27th of October, that when the standards become available, Zimbabwe is going to early adopt the IASB IFRS sustainability disclosure standards. So yes, capacity building is very important. Incorporating the full suite of standards, IFRS for SMEs, full IFRS, IASB standards, and IPSAS standards that are also required for use in this country is the way to go. On this call, we do have academics and learning providers from Zimbabwe. And also you mentioned the issue of mid-tier firms who in the normal course of things I expect will have a clientele base that is within the scope of the IFRS for SME. Maybe as a last question or a comment, if I can request anyone from the firms in half a minute, your comment in terms of the use and what needs to be done to promote the IFRS for SMEs. Thank you. I see Louis Clements from PKF.
I think, Admire, if we can keep it very short, we are already over our time allocation of 2.5 hours, but I'm sure there are still a lot of very important discussions. So maybe we can give the last two people a very short opportunity, and then I think we need to close off.
Sure. Any comments, gentlemen? If not, can I hand over back to you, Marianne, to close off the event? Thank you.
Thank you very much. I think it has indeed been a very fruitful workshop with a lot of inputs and very good discussions. So thank you for everybody for attending and for sitting through the 2.5 hours. I think our participation stayed fairly high, which is very good in such a busy time. Thank you very much to the IASB also for all your inputs and efforts in facilitating this, to all our speakers. Thank you very much, and I wish you all the best. Thank you.
Thanks, Marianne. Thanks, Admir.
Thank you, Marianne.
Thank you, everybody.
Thanks, everyone.
Thanks, academics.
Bye.
Thanks to the academics. It was great.
Thank you.
Bye.
Hi. Huh?